It's Saturday, and I have promised you guys I'm going to show you how I took or how I did the analysis and predicted what is going to absolutely happen in the market. We actually predicted the sell, but the 1 a.m. didn't give us what we wanted, but the price gave us the exact thing we were actually looking for in the chart, right? So first of all, the overall directional bias of this certain pair, it's downtrend, right? Price is absolutely moving, let's say in a downtrend, right? If I'm not mistaken, moving what? A downward trend. We are bearish. In such scenario, we will look for what? Bearish what? PDRAs, right? Bearish, 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 bearish. Basically bearish. So before we strike on, let's do some expose some few things you need to know in a certain market before, let's say, before you start trading, before you get or before you look up to your chart. Because the most important thing in every trade you are taking, or the most important thing every successful trader does, is what? Where am I taking trades from? Where is price reacting from? Right? So currently, I actually dropped the sell. I actually dropped and predicted the sell. I think is it last week? Is it last 2 weeks, right? On the last video I dropped on YouTube, we all predicted the sell on Euro USD from here, this gap, and price flew down. Buy side liquidity, right? Buy side liquidity. I'm also areas where price react and what reject, retrace towards a certain key level and want to dump. So the most important thing you need to master and you need to know in every chart or in every trade you're taking is what? Directional bias. The directional bias, DB, key level, right? CRT, and what? Time. This is the most important thing you need to what? Focus on. Am I clear? This is the most important thing you all need to focus on. Directional bias, key level, CRT, and what? Time. So I'm going to what? Play all these into the trade we took this week. So first of all, directional bias of this chart is what? Bearish, right? Key levels are area where price will definitely react. Hope you understand. Key level are areas where price definitely will react. What are the example and how and what key level am I to use? That was the most important thing everyone asks. Oh, which key level am I going to use? Should I use fair value? We have up to 3 to 4 key level we use in every trade we take. First of all, we use what? The fair value gap. Fair value gap is the number one. FVGA, right? Order block, old high, and old what? Low. Same as swing high, swing low. So you see this 1, 2, 3. They are the most important thing. Those are areas where price will react from or are drawn to, right? Those are areas where price reacts from or are drawn to. So now let's do something nice here. Look at this chart. Look at this one here. Look at it. Look at this one here. We got a fair value gap here, right? This is a fair value gap. 1, right? 1, 2. Look at it. Hope you understand. Look at the fair value gap. Number 1. Order block. We have another block. Do we have another block here? Yeah, we have another block here. Look at an example of what's another block. We can use this, or let me use this here. Order block, right? Order block. Old high and old low. Look at it. Old high and what? Old low. Old high, old low. Old high, old low. Old high, right? Sorry, this is an old low. Sorry, old low, old high. Right? Those are key level. Those are areas where price will definitely react from and mostly drawn to. Fair value gap. We have fair value gap. Fair value gap. I've explained fair value gap to you guys. Fair value gap. Look at another fair value gap here. Right? We have fair value gap. So you just need to what? Stick to it. Right? Then what is the next thing? CRT. If you could check, most key level are all CRT. Candle high, candle low, turtle soup, high, low. Look at it. CRT. Most key level are what? CRT. 1, old high, CRT. Look at it. Sorry. CRT. Those are areas where price form. CRT. Right? CRT. Look at it. CRT. CRT. Look at it. Candle range theory. Am I right? Yeah, exactly. Yeah. You can see it. Old low. CRT. Look at the sweep of this low here. Yeah. Same thing here. Target. Hope you understand. You can check it yourself. Let me just give you a minute so you can check it. Now look at it very clear. Look at this other block here. Candle range sweep, the 30 sweep of this previous candle low, and what? Delivery. High. Now take a look and check it yourself. I'm giving you only just 1 minute. All right, it's okay. We shouldn't waste time. So these are the most important thing you need to know. Let me remove them. I don't want to waste time. I don't want to waste a lot of time. Right? So now, look at this old low. We never had any CRT on this old low, but we got an SMT with what? GBP USD. Euro USD didn't take the low, but GBP USD. Where's GBP USD? Where the hell is that guy? GBP USD did that. You can see it. GBP USD did that. You can see it. Let me. Yeah, something like this. Right. GBP USD did that. So, right. Hold low, purge, CRT. Why Euro never did that? It only give us an SMT. That is why Euro was very fast. Very fast. So in such scenario, whenever you notice that GBP USD give us a CRT, then you go down to Euro USD on the 4-hour time frame. Look for what your CRT on the 4-hour time frame. There must be CRT on the 4-hour time frame. Look at it. Right, look at it. 36 of the low, 50% target, first target, then 100% should be our second target. Hope you understand. All right, so we have framed out our directional bias. We are bearish, but we trade key level, right? Whenever price approach a certain key level, we will trade it. It's either we trade it to the 50%, and if price is absolutely giving us the move, we trade it to the 100%, and we will exit. Remember, the chance of buying here is what? Is let me say 75%, because we are already in a bearish state. So in such scenario, we would take at least 50% should be our target. But if price could deliver well, then we would go to the 100%. Now look at what price did. The 30 of this low close inside the range, then target should be what? The 50% hit, right? So now what happened here? Let me give you what a clean. Let me quickly clean this stuff so you can understand what happened here. Okay, we are on a 50% of what? The range, right? We hit the 50%, and which most of us would be afraid of if price could at least dump. But in such scenario, price couldn't what? Soup the high. We never had any soup, right? So in such scenario, whenever you see price doesn't soup a certain high, let's say something like this. Let's give an example. Something like this. Look at this one here. Look at the gap. Price hit the 50%, soup the high, right? And what down? But price never did so. Price what? Ran back to the low of what? This candle. Soup it and what? Fly to the high. So in such scenario, whenever you notice that price didn't soup a certain high of a range, or let's say 50%, it ran back, soup the low and close inside, then expect what? More push to the what? To the candle range high, which is the CRT high, right? So now in such scenario, what did we do? Well, I think we played the time model here. We played the 159. 159. If you could remember, I once posted a video about 159. 159. Same thing here. 159 mostly found in the chart. 159. 1 a.m., 5 a.m., 9 a.m. We are bullish 1 a.m., 5 a.m., 9 a.m. So 5 a.m. soup 1 a.m. low. It didn't soup 1 a.m. high. Had it been priced soup 1 a.m. high and close inside the range, then definitely this gap is now what referring to as prices will definitely respect it. But price did not, right? Because the time wasn't like the time was let me say how am I going to put this? Okay, let's just leave it. First of all, 159, playing the role of 159, what? On what? A key level. Remember, our key level was an old low patch, right? 50% was our first target, and we found 159 toward the 100%. You can see it, 100%. So I quickly run down to the 15 minutes time frame, wait for change states of delivery. You can use the 15 minutes time frame. You can also use the 5-minute time frame. So in such scenario, that is 5 a.m. soup 9 a.m. So in such scenario, you can go down to the 5-minute time frame to look for what? Sniper entry, right? So I quickly run back to the 5-minute time frame. I wait for a nice change in state of delivery. Look at the 5-minute time frame. Look at what the price did. Let me fix this nice clean. So look at what price did after the change in state of delivery. Look at it. High, low, tortoise soup, expansion to the high. We got a change in state of delivery. So now the candle that caused the expansion, or the candle that tortoise soup the high, is now our what? Entry, our key level for entry. Take a note and write this down. It's now what? Our key level for entry. So in such scenario, price has already given us a protected low. So now this is a protected low where our stop loss should be what? Kept. This is it. At least below. Something like this. Then our target should be what? The 1 a.m. high. 1 a.m. high. Look at the 1 a.m. First target should be what? The 1 a.m. high. Then if it's convenience for price to expand high, more higher, then you will target the 4-hour CRT high. The 4-hour CRT high. Sorry, the 4-hour CRT high. Look at it. Tortoise soup, change in state of delivery, and what? The tracement to our what? Entry. Price give us a clean entry model. And what? But you can also take trade directly from key level. You can look at the first key level that price reacted from. This is it. Sweep. Look at the key level here. Yes, if I'm not mistaken. Yeah, you can see it. Why this one is well in the advanced area. If you want to learn it, you can meet me privately. But learn this. This is the best. This is the best. Wait for change in state of delivery, retracement to the key level, forming an entry for us, and expansion to the high. First of all, 1 a.m. high should be your first target. That's the 1 a.m. high. M high. Then what? The 4-hour CRT. CRT high. CRT HIGH. Should be what? Our target. At least this is a nice word. RR 11.19. One ratio 11.19. So that is how I took this trade. That is how, and that is exactly how I took this trade. This is very simple. 1 a.m. failed. Had it been 5 a.m. 32, 1 a.m. high, then definitely we're looking for exactly something like this to drive price to what? To the draw. That's a monthly draw on liquidity. Right? To drive price to the monthly draw on liquidity. Let me give you an example here. Let's go down to the 4-hour time frame. Let me give you an example of what 159. I think something here, if I'm not mistaken. 5. I'm so sorry, a little bit. Let me look for 159. Okay, let's go down here. Let's think something like this. Look at the chart. 30 soup, change the state of delivery, 159 down. I'm looking for a very better one with a key level. Okay, look at this one here. 1 a.m. I think this is a nice trade. I think this is with a key level. First of all, you notice something here. We never had any key level to push price high. We were on a bearish state. So in such scenario, whenever you notice we got a closure of 1 a.m. Let's say this is the 1 a.m. candle, 5-9. So 5 a.m. 30 soup to 1 a.m. low, right? 30 soup, 1 a.m. low, and close inside the range. But we have a key level. Remember, we're in a bearish state and we never hit any key level for buys. That is why you need to stick what? With key level. Whenever you see, let's say 159, you notice that 1 a.m. give us a very long stoned candle. 5 a.m. pushed the low, and 9 a.m. is trying to expand. It will only complete at least 50% of the candle. Then what? Dump. Remember, because we have a gap, we have a key level. We never hit any key level below. Had it been with 32 this low, then we expect 1590 what? At least complete its play, but we never. We were bearish. We got a key level, fair value gap, right? Look at the fair value gap here. Fair value gap, if I'm not mistaken, right? Fair value gap was our key level, and what? Price dump. Now let's go down to see entry, and either the 15-minute or 5-minute. You can use the 5-minute for sniper entry. Let's find it. Okay, look at it. I'm coming. Sorry. Okay, so on the 5-minute time frame, it's going to be so hard for this price to get. Okay. After the tortoise soup, we wait for change in state of delivery. Why? Let me move this way, make it easier. Tortoise soup, wait for what stop of this low. Right? Then we wait for change in state of delivery. The candle that stopped that low should be our entry. So this was the candle that stopped the low, right? This candle here that stopped the low, so that should be our entry. Set our entry here, stop loss below or above, sorry, then target should be at least the low of the one, either the 5 a.m. candle, right? I think this is about 6.86. You can also run it down because we are bearish. We never had any key level to the downside, so you can run it down as much as you can. Hope you now understand. This is a little bit similar to the butterfly effect. Right, this is little bit similar to the butterfly effect if you're actually trading butterfly effect. Butterfly effect mostly did on time, basically. Time of purge, time of change in state of delivery, what time did it happen, right? Same thing I did on Euro USD, but I will explain you guys, I will give you, let me say, a clue to that. Time of purge, what time should we wait for purge? What time should we wait for entry? I'll be giving you guys that one here. So watch this video, stay tuned, and what? Learn, backtest, rewatch, learn, rewatch till you master it. Ask questions as well. Learn to ask questions. All right. Thank you.